Welcome to Pink Digital News. If you are new to the channel, hit the subscribe button and like and share this video. Today, I will talk about reading crypto charts for beginners. Looking at crypto charts can be daunting and confusing. However, once you grasp the fundamentals and with practice, you will be able to understand how to read crypto charts. The first thing one pays attention to is the price action. This is the movement of crypto prices over time and can be represented by a line or candlestick chart. We will get into all the important features in reading a crypto chart, but while there are different types of crypto charts out there, the candlestick chart is a popular choice among traders. As you can see in the chart, it is made up of red and green candlesticks, which indicate open and close price, highs, and lows for the time they represent. Now, as you look at the candle body, which is in green, it represents how much was traded as well as the price it opened and closed at for the given time signature. The wick or the lines at the top and the bottom indicate the lowest and highest prices during the selected time. The color of the candle body indicates whether the closing price was higher than the opening price, represented by a green bar, or lower than the opening price, represented by a red bar. The green up bar can be considered bullish and means it is on an uptrend, while the red down bar means it is bearish and on a downtrend. Another way to understand crypto assets is trend lines, as they help to confirm and identify different trends in the market. A trend line is an upward or downward straight line that intersects at 2 points. There are many persons who participate in crypto trading, some as investors, others as traders. Investing is executed with a long-term view in mind, like years. Trading, meanwhile, moves to pocket gains on a regular basis. The most popular trading strategies include day trading, swing trading, scalping, and position trading. Scalping and swing trading are two of the more popular short-term investing strategies. Scalping involves making hundreds of trades daily in which positions are held very briefly, sometimes mere seconds, so the profits might be small, but the risk is reduced. Swing trading uses technical analysis and charts to follow and profit off trends in stocks. This is more intermediate term, often a few days to weeks. Day trading involves using technical analysis and charting systems to make many trades in a single day. Position trading is more of a trend follower. One will identify a trend and an investment that will benefit from it, then buy and hold the investment until the trend peaks. One can then identify the right entry and exit prices in advance and control risk using stop loss orders. Time frames are also a very important aspect of reading a crypto chart. A chart can show a snapshot of the market in a range of different time frames, which will change what the technical indicators are signaling. This is why it is very important to trade crypto using multiple time frames. Popular charting software will usually display charts in time frames from 1 second up to 1 month. The time frames you use will depend on what type of trader you are. Scalpers looking for tiny quick profits will trade on shorter time frames of a minute or less, while day traders may use the 15-minute, 1 hour, and 4-hour charts. Long-term traders and hodlers will only be interested in the daily, weekly, and monthly charts. Patterns often emerge in crypto charts that lead to more predictable future price movements. These formations within the chart can be used to identify trend reversal, trend continuation, and bullish or bearish momentum. Some of the more commonly recognized chart patterns for Bitcoin and cryptocurrencies are as follows. Reversal patterns. These are head and shoulders, inverse H&S, cup and handle, double top and bottom, rising and falling wedge. The next one is continuation patterns, which is pennants, rectangles, flags, rising and falling wedge. And the final one is bilateral patterns, which is symmetrical triangles, ascending or descending triangle. When you are looking at crypto charts, there are a few things you need to pay attention to. One is to identify crypto price trend. You can do this by looking at the price action over time. Secondly, you need to pay attention to crypto volume. This is the amount of crypto traded over time and can be used to identify trends in the crypto markets. Lastly, you need to pay attention to crypto news. This can be used to identify potential catalysts for crypto price movements. So for example, if there is negative news about the crypto, more than likely the crypto price will fall. There are more contributing factors which you will need to pay attention to when reading crypto charts. Market cap is a good way to start, as coins with very low market caps tend to behave in a much less predictable manner, and vice versa. This goes hand in hand with trends. Which way is the market going? Is there a lot of activity? Is the market bullish or bearish? Based off this, trends can emerge. The next factor to take into consideration is Relative Strength Index, which is RSI. This measures price movement by comparing the current price to past performance. It sums up the average of days the asset was up and average of days the asset was down. Most exchanges and trading tool will calculate this. RSI ranges from 0 to 100, and an RSI over 70 tends to indicate that an asset has been oversold and will likely go down, while an RSI below 30 represents the reverse. Please note that this is just a tool that helps to get a clear picture of the market, and it's not a guarantee. A moving average, MA, is one of the most commonly used types of technical indicators and essentially cuts out the noise by generating an average price for a given cryptocurrency. Moving averages can be adjusted to periods and offer useful signals when trading in real-time crypto charts. The most commonly used moving averages are used for 10, 20, 50, 100, or even 200-day periods. These make market trends more visible, with a 200-day moving average being considered a support lever during an uptrend and a resistance lever during a downtrend. There are different types of moving averages used by traders. A simple moving average, SMA, simply adds together the average price of an asset over a determined period and divides it by the number of periods. Another factor is support and resistance. Support is the low end of an asset's value that is touched multiple times before bouncing up again, whilst resistance is the high end of the value that is hit before the price tends to fall back down. In other words, you can look at it as a bottom point where purchasing crypto is a bargain and a top point where you can see selling your crypto as beneficial. Now, I've managed to summarize a few tips for reading crypto charts, so we're going to get into it. The first one is price action. The second one is look at overall trend. That should give you an idea where the price is headed. The third one is look at the support and resistance levels. These levels indicate where the price is likely to find support or resistance. The fourth is look for patterns. Certain patterns can give you an idea of where the price is headed, for example, a bear or a bull flag. This falls in line with trend. Which way is the trend going? Bullish or bearish trend? Number 5 is momentum. Does this trend have a lot of momentum? Number 6, use indicators. They can be helpful when trying to predict price movements like simple moving averages or Bollinger Bands. Number 7 is look at the fundamentals of the coin. Is it good? Are there any issues present? And number 8, look at correlations like what can affect the price from outside, if there is news that would affect the price, and so on. Number 9, another thing to look at is whether the trade is long-term or short-term. That is also very important to note when considering trading. And number 10, also knowing what exchanges it is trading on and whether or not there is liquidity is a plus, as this would help with buying or selling without affecting the general stability of the price. Now, this is by no means the extent of it all, but this should help in beginning to understand how to read crypto charts and learn more of what comes across the screen instead of everything looking like lines moving up and down. In any event, while you're doing more research on this area, remember this takes time and practice, as you have to experience it for yourself in order to become more familiar with reading crypto charts. Please share your thoughts in the comment section below. Don't forget to subscribe for more content and updates, and like and share this video. Thanks for watching. Pink Digital News, signing out.